Today is April 26, 1:14 p.m. We detected unusual options on Sunrun. RUN is the ticker symbol. It is trading at about $20. It had dropped 6% so far because the another company called Enphase, one of the very largest companies, reported earnings and it wasn't so good, so it is dragging down the solar industry, and so that's the reason why we have a drop. And so in this video, we're going to first identify those unusual options we saw on Sunrun, then analyze them, and then to number 3, we're going to do a trade that show you what our trade is for this unusual option activity we saw. Keep in mind earnings is also coming up. That is on May 3 because these unusual options are predicting this earnings, and it is because of these earnings from this other solar company. You'll notice that today there was quite a lot of puts, quite negative towards this solar industry now. And so when we look at the options tape, you'll see these lots of quantity, 4,923 of them, 19 strike puts right after earnings. This is May 5. So you'll see lots of these 19 strikes. You'll also see them at the May 19s, the 19 strikes on the May 19s. So when we look at the options on May 5, you'll see this here, 10,000 volume here, much greater than the open interest here at that 19 strike, where many people are buying this 19 strike here. And so the May 19s also, we have quite a lot of quantity and volume here, all open orders because they're all greater than the open interest here at the 19.5 and the 19 strikes. Keep in mind, these may not necessarily be large institutions. It could be retail because this is based on this negative sentiment towards the solar industry, and so lots of people are buying this and in anticipation of a negative result for earnings. So what we are doing based on this is instead we are buying this May 19 all the way here closer to the 67 delta. We're buying this put that is deeper in the money here, you'll see here. And so you buy that, and then what we're doing, instead of buying that 19 strike puts here that we see many people are doing, we're selling it to take advantage of that volatility because it's quite high at 116, so we'd rather sell it. And so what we are getting here is a bearish diagonal vertical spread, and so you'll see here currently it is trading at $20, and so there is some leeway here where if the stock does come up to 21, about 20.99, we will still break even, $21, right? So this trade will be profitable as long as we stay below $21. And so what we'll do is we may even take this trade off before earnings if the profit is good, because we may not want that earnings risk and we're taking advantage of this high volatility. We would set a kind of alert at around $21 to be watching, to maybe close this trade up if it does start to rally again after this. And so you'll see here it is also bearish. It will profit as the price drops. It is above this zero line here. And so as it drops, we will also continue to have a positive theta, which is what we like. Vega is not too high, which is what we want. We don't want this to be too high because we are approaching earnings, and after earnings it will drop. So keeping it kind of near zero. So it's not too, we don't have much volatility risk with this trade. Because if you were to just buy the strikes like what many people are doing, if they just buy this strike, it does have quite a negative theta decay. You'll see here a negative 10 theta decay, where your break even is actually all the way down to $18 at expiration. After earnings, you actually has to drop less than $18 to actually start to become profitable. You'll see here that it is only at expiration that it has to drop below this 18 mark for it to be above that zero profit line. And so because this is a trade where we may actually start taking profits right before earnings, based on the price action before earnings, we don't want that negative theta risk. We are mostly trying to take advantage of this high unusual options activity, which has increased the volatility. So we are selling this instead of buying it. And so that is our trade for Sunrun, trading right now at 19.99. And so whether or not this can stay just below $21, that is all we need for it to just stay below $21. It can rally up, that's fine, as long as it goes back down, just stays below this line. And we will monitor this and may start taking profits before earnings. Okay, so that's because that's still in about 9 days we still have. All right, hopefully this was helpful. If it was, or you learned something, or you found this video helpful in any way, please like this video and help us with a thumbs up, and that encourages us to continue to make more videos and making more content to put out for everyone to participate in this analysis and to learn. And make sure to subscribe and hit that bell icon if you want to be notified of any other unusual options we see as soon as possible. Take care.